Eric Muathe, Muathe.com. It is April 17th, 2017. Let's take a look at markets here. Markets are up with at the highs for the day, about 0.6%, 6.7. And let's take a look at what the charts are saying here. I'll have some ideas at the tail end of the video. Let's begin with the Nasdaq Monthly. And as I stated in my last video analysis, the key here right now is whether the market can hold above this 69.1 threshold, and we are back above it. Keep in mind, we discussed the idea that the market was in a confusing spot, very hard to tell what it was trying to do, and so we should not be surprised either way. So we see pretty much the market erasing all the losses from Thursday's trade, and now the Nasdaq is back above this number here. So that's the key. Are we going to hold above 69.1, or is this just a spike before we move back below 69.1? Now if we take a look at the weekly for the Nasdaq, and if we expand this to about 3 years of weekly data, I think what is going on here, it is that the Nasdaq is coming back to test the line that was a breakout line. So if you take the top side, this was a resistance line. We broke out above this line at the beginning of the year here, which corresponds with this movement in price. Of course, the market is higher since then, and if we extend that same line, it looks like the market is coming back to back test that line. As of right now, that looks like good support. The more this holds, the more the market is telling us that it wants to test the recent highs. So let's watch this. Support here is the bulls doing what they need to do, which is take back the market after a slight pullback. As long as that line is holding, one can logically expect the market to be moving higher. We take a look at the daily. Take a look at the daily for the Nasdaq, and we can go to the lows of last year. Let's go back about 1.5 years on a daily chart, so 18 months of daily data, and we can see that this is where the market moved above this range. That movement was good enough to bring the market off the lows, and we had a nice run since the February lows of 2016. That was the entry. On hindsight, we take that information, draw our uniformity support line. Should be something like that, and we've been bouncing on this line successfully. We held here during these lows. Uniform activity bounced back above the blue line for this re-entry. We bounced on the line for this re-entry. Uniform activity below the line, back above it for this re-entry, and now without any type of adjustment, the same line is giving us uniform activity support. What that means, and also we can also see that it is doing its best to hold the 50-day moving average. What that means is, as long as the blue line is holding, as long as the market is bouncing on this line, it means that now the possibility of testing these highs or even moving above those lines is back in play, as long as that market is holding that level on the RSI. We can also see this on the Dow. Let's take a look at the Dow daily. Same type analysis, pretty much go back to the lows of last year, which is this entry here. This RSI movement brings the market off the lows. We draw a line from here, and this is where the markets have been bouncing, and recently we can see that the uniform activity here for these lows as of Friday's lows. So because that line is holding, that means that this is good enough support. As long as the line is holding, there's only one way of looking at this, that the market wants to bounce and attack these recent highs. Now, unless the line becomes violated at some point, if the market were to break below that line, then that would be confirmation that for the first time since the lows, going back here, that would be the first time the market would violate this blue line. But this blue line, as you can see, has been where the Dow has been finding short-term support before staging a bounce. So all this was successful in holding the market from dropping significantly, and even here, recent support here, and now coming back to test that line. So as long as this line is holding, we can assume that the market continues to be stable or at least now is looking for a bounce. Take a look at the Dow Transports, and we can see on the Dow Transports, in fact here we can even draw a line connecting the lows. Different view with the same conclusion that the market is bouncing exactly where it needs to bounce, which is this RSI lows that goes from connecting the lows here, this low and this double bottom low. And don't forget, it is also the line going back to this entry here. Off the lows on the Dow Transports, this is where there was a movement. So this RSI movement here. So this movement, you can see, was successful in bringing the Dow Transports off the lows of last year, just like we saw with the Nasdaq and the Dow. This entry, this RSI level, has been short-term support for the Dow Transports with uniform activity at the major lows. Double bottom here recently, which is here, and now over the last 2-3 days bouncing on that same line and holding. So as long as the daily chart is holding those two lines here, we can assume that the Dow Transports also looks to recover after a recent pullback of its highs. And of course the other line goes back to the line connecting RSI lows. So as long as we have support on those two lines, we have to assume that this market is poised for a bounce, and until it changes its behavior and breaks below this line, the equation seems to be shifting now from a pullback market to one that is stabilizing and wants to recover. That's what it is telling us, unless, and that's the key, unless we break back and break below those two lines. Since we haven't seen the break, we can only conclude that the market itself is looking to bounce. Take a look at the S&P 500. And here on the daily, we can also see the same type of analysis. Really pretty much just repeating myself here, but no problem with that, because we have to explain what is going on. And we can see that this was the movement, just like we saw with the other major averages. This was off the lows of February 2016. And I just draw the line where the market's been bouncing with uniform action. Uniform action support for the lows there. Double bottom here for the lows there. Uniform activity below the line back above it for this re-entry, and now support here. As long as that line is holding, we have to assume that this market is poised to move higher. We take a look at the S&P 500 hourly, and on the hourly, if we take a look at a 6 months hourly, so let's do that. Take a look at 6 months hourly on the S&P 500, and what we see here, we get this movement on the RSI in February, which began this explosive move recently. So from here, market's been higher. So we take that information and we can see that in the current market, over the last couple of days, we've bounced on this line, and this line continues to hold, suggesting that as long as this line is holding, this market is finding support exactly where it needs to. We take a look at the 30-minute chart, and even here we can see that there's a line connecting RSI lows that is taking place. Just connect the lows like that. You can see we are bouncing on this line. So as long as that's the case, this market continues to have found support exactly where it needs to find support. Now at some point I need to express here the idea that should we ever break down in the coming days, coming weeks below this line, then that's when we'd know the market has broken support. But right now it is finding support exactly where it needs to. We take a look at the 5-minute chart, and we can do that because the VIX is in the teens, and we can see that this is where the market's been stalling all day. In my opinion, the 5-minute chart is representing a little bit of a problem here. This is where it broke down. So there's a fight going on, but I think this is 5 minutes, so we shouldn't give it too much consideration because of the strength of the current weeklies and daily charts. But here we can see that over the last couple of trading hours, market's been failing to move above this line. Keep in mind this was the break of the highs. We hit resistance here, short-term highs, resistance here, short-term highs, resistance here, short-term high. So this line has been a problem for the market even here at the highs there. So short term, let's just say this, that we can wait and see what happens. In other words, there's no rush to buy the market. You'd want to see the market clear this resistance line on the 5-minute window to confirm that it truly has strength. So I think what I'm trying to say here is, yes, we see reasons for a bounce, but short term, no need to chase the market until it clears this line. If it fails to move above this line, eventually it might affect the hourlies and the dailies. So let's just watch for that. In other words, if you want to go long the market, just insist that by the time you go long, the market has cleared this red line, which has been a problem of this major high. It's a major high for the S&P 500. This is where it broke down and now seems to be showing resistance. Well, if you want to play the upside in the market, wait for this line to be broken to the upside. And also let me stress here for the S&P 500, we need to continue watching how it's trading in relation to its 69.1 threshold. That's one of the keys for this market. The more it stays above this level, the more pullbacks are going to be shallow, and the more it's only going to be attacking fresh highs. So we need to be vigilant of that. And for those of you who don't know why, it's because markets tend to be strong when they are trading above 69.1, and this is a good chart to confirm that. We moved above 69.1 here in 2013. We held above that, defended that level until we broke down here, which is sometime almost 1.5 years later, close to 2 years actually. So holding above 69.1 is a big deal. Let's take a look at the XLF. The reason why I want to show you this line is because also we see that it is bouncing nicely where it needs to. The last time it bounced back above RSI 50 on a weekly chart was here, in fact even here. Uniform activity below 50 back above it for this entry. Uniform activity below 50 back above it, it recovered, and now we seem to be doing our best to hold this line. So if this line holds and stays above 50, this is a market that wants to bounce. Otherwise, we need to watch for this because it's early here. Who knows? Maybe eventually we go on to break below 50, suggesting that there could be more upside. But for now, we take what we see, and what we see here is the market is trying its best to hold above RSI 50. If this is confirmed as support and it stays above the 50 level, what that generally means is that the market is going to do its best to challenge recent highs. And so this chart here, the emerging market ETF, the EEM, is a good chart to explain what is going on here. So there's two schools of thought. The first school of thought here is we could very easily break out above the recent weekly closing high. So let me give you that level to watch for a breakout, and if it breaks out, it's a good buy, and that would be any movement that takes it above 39.81. That would be a good breakout on the weekly. Because if you take a look at the monthly, and this is the fight going on here, is two schools of thought. If it can break out, then it could confirm that it is moving its RSI to 3-year highs, which is what the bulls want to see. It would also confirm that the MACDs are at 3-year highs, which is exactly what you want to see during a strong breakout. So here the key is, if it breaks out, then it is giving us a buy signal. But keep in mind, I've been saying that we need to watch for this for a sell signal. So that has been my view, and actually I think I still hold on to that view that eventually this stalls based on other charts. You can see that this was the break in 2008. So it broke down here off the highs there. We go into a major drop. We fail again here. We drop resistance here in 2014 off the highs here. So if we stall here again, if we do, and I think we are going to do that, chances are the next major trend is down. Even though if it can clear this trouble spot level, in other words, if it can break out above this line, then it becomes a buy. So it's an inflection point. That's why I'm saying it's a tricky time in the market to be aggressive either way. You need some of these things to resolve bulls, if the bulls can manage to clear this resistance, that's a major buy signal. At the same time, I'm leaning to the idea that this becomes resistance, and ultimately the next major trend for emerging markets is lower. Let's take a look at the EWZ, the Brazilian market. And we can see here, the reason I want to show you this chart is because it's showing clear support, RSI lows. Just connect the lows on the RSI without any type of adjustment. It connects the lows here, here, this double bottom, and now it is coming back to bounce exactly on this line. So as long as this is holding this line, the Brazilian market is also set to move higher. Now, until such a time as we break below that line, we have to assume that this is stabilizing, and in other words, it could be going into a period of, at the very worst, sideways, and at the best, to a good recovery. But this line would have to hold for that to remain true. So this line, as long as this line is holding, the bulls are defending the recent slide, and now the market is looking to bounce. If we break below that line, then of course we go back to our idea that these markets are eventually going to drop based on the monthly chart. And again, on the monthly chart, we can see the problem here is this line here. And we've already seen that this has already given us a double top here. So until we clear this line on the monthly for the EWZ, I would speculate that we are still looking at markets here that could be looking to lower prices. But if they can clear what is resistance, that changes the landscape totally, and now this becomes from being a sell signal to being a good entry for a breakout move to the upside. That's why I'm saying it's a confusing time here in the market. We're trying to decide which way the markets are trying to go, and obviously it's gonna force some people to go in the wrong direction, just based on the fact that you might bite based on one thing and you overlook another aspect. So just be careful here. You need to see confirmation, let's say, of a price breakout or things like that before you can be aggressive. If we take a look at silver, and again here I want to show you what is really confusing. So if you take a look at silver and take a look at our minimum requirements, we can see that there's a possibility here it could easily break out to 3-year highs on the monthly RSI, which would be a major buy signal. We can see that one of the MACDs is breaking out to 3-year highs here, which is good, and also moving above the 0 line on the MACD. So what that means, if this can clear this RSI level and move to 3-year highs, silver becomes one place where we can look for momentum to the upside. So that's the view. But at the same time, this is where it could easily stall, because this was the break level. So we are at an inflection point even here. We broke below here. We came off the highs of 2016. So this could all actually just be confirming the break line right there, and also currently where it's trading. If we take a look at the weekly, we see that the weekly is coming back to test the recent break level. And that break level right now is being tested. Market is opening the week by responding to that level and pulling back based on this line here. So you can see we are seeing weekly resistance, and yet if it can clear this resistance level, the monthly chart could also be breaking out. So we're in a tipping point. Either we are stalling to see the next major trend being down, or we can clear resistance and have a fantastic move to the upside, and that is still playing out. Now this is the same thing we've been saying about gold weekly. So GLD, you can see that the gold chart is coming back to test the recent break level. So this was the resistance of the highs there, and now we are coming to test that level. So it could logically be where it stalls, or it can clear that resistance. And also on the monthly for gold, what I'm watching for here is gold surprising to the upside. And the reason why I say that is it won't take much for gold to move to 3-year highs. The RSI right now is not at 3-year high, so we cannot really be assuming this is going to be a good trade, and the MACD could easily break out. But yet, as of right now, we don't see this being confirmed. So I'm still leaning to gold being sideways to down based on the weekly chart resistance. This is also my view. If you take a look at crude oil, also crude oil is coming back to test the recent break. The RSI broke down here recently, so this break line is being tested, which is this level here, and as we begin the week, we are showing resistance there with uniform activity on the RSI, suggesting that the next major swing trade, or at least a swing trade for now, I'm still leaning and expecting this market to pull back. Keep in mind, if we drop below RSI 50, I would expect a big down week. Also, we can see evidence of this on the daily. And maybe I should talk about the SCO trade I sent you guys on Thursday. And we can see that this is the line that is being tested. This break line on the RSI has been a problem for crude oil ever since. We've been getting short-term highs every time it fails to move above this blue line, and recently uniform activity above the line and back below it. That's why I was giving that SCO trade for a bounce. So go back to that SCO trade, and it's one of the ideas. I think it's still within the buy point range if you take this line here. So I would still consider this to be one that you can look for to play the market if crude oil is poised to go lower. SCO on a weekly chart, so it looks like on a weekly chart we can see it is doing its best to find support on this line. So we can see here it's trying to improve in price, RSI is trying to hold. So I think this is one you can look at as a trade. If you want to play short crude oil, take a look at SCO, which could still be poised to recover after a massive pullback of the highs of 2016. Now let me share with you the biggest argument that the market is poised to move higher. This is the biggest argument, and it's a good one. Take a look at the VIX weekly. We are starting the week by confirming this line that we discussed last week. That's a major sell signal for the VIX. And also, if you draw a line, just call it somewhere around there, this line gives you all the good entries into the market. In other words, if you went long the general market here, that was a good timing. If you went long the market, let's say here, when that was rejected, that was good timing to go along the general market. Go along the general market here during this level, and now showing resistance here. So this chart by itself suggests that the general market is going to clear the current resistance levels and that the market is poised to move higher. We take a look at the daily for the VIX, and even though it's holding above the buy point here, the problem is that we are seeing rejection when trying to hold above 69.1. That tends to be a sell signal. We saw rejection here with uniform activity for the highs there, rejection here for the highs here, and this rejection, and then another double top rejection for the daily highs here and here. So this daily chart is not very encouraging for those who would like to see the market pull back, and this is exactly what the bulls wanted to see. The VIX struggle, which means that the general market is now stabilizing, potentially to even looking like ready to bounce. Now, if you take a look at where the VIX is finding support, just like we saw with the S&P 500, it is on the 5-minute window. We can look at the 5-minute window because the VIX is above its current trading range of recent months, trading in the mid-teens. But we can see this was the RSI movement that brought the VIX off this level here, and ever since that it's been bouncing on this, close to this blue line. So all this is where the VIX has been finding short-term support, and even as of today this line is holding. So if the VIX is to drop, one thing we're going to be watching for here is the VIX would have to break below this blue line. If the VIX breaks below this blue line, that means that the general market is now poised to move higher, and that we should not be surprised that day to day, week to week, that this market is back to its winning ways. So here, as I conclude the general market analysis, I want to show you one chart that I'm watching closely, and it is the Dow Jones. And let's go to the hourly, take a look at 6 months hourly, because I want to show you there's a line here that is one we can watch for guidance. Reason why I'm watching this line is because it's been guiding me in terms of short-term direction. If you take this line here, so there was a breakout. This breakout in February for the Dow on the hourly corresponds with this movement. And what I'm going to do is I'm going to extend that RSI line. Just going to draw it like that. That same line. And what happens is we stayed above that line. In other words, after we broke out here, the market stayed higher until it broke down below here, which is this period. Now, after the break, this line has been resistance, giving us short-term sell signals on the Dow. Resistance here, short-term sell signal. You can see this was a fake move because it went above the line and back below it with uniform action, and that's exactly what it was, a fake move. And again, recently market hit that level of the highs here of last week, and now we are back in this line. So what I'm saying here is I'm watching this line for guidance. I know it's a line that just is seems arbitrary, but the market's been responding to this line, so I'll continue watching it. And so we can see that until the Dow can clear this line, the market has yet to prove itself. So if this line is confirmed as resistance, maybe the market is not as strong. The market for me would need to clear this line if I was to call this market due for a strong bounce. So we can watch this for clearance. And also don't forget that we took a look at the S&P 500 on the 5-minute. And let's do that because the market is trading at the highs for the day as I record this. And it could be that now the S&P 500 is, let's go back to that 5-minute chart. Exactly what I was saying here. The market would need to clear this blue line, and as of right now it is doing exactly that. It is doing its best to clear that line. So if the market is above this line, and given the strength of the daily chart, which is bouncing where it needs to bounce, keep in mind this line goes back to the lows of 2016, and as long as the weekly for the S&P 500 is bouncing just like we saw with the Nasdaq, as long as this previous resistance line, which was a breakout line here, so extend that line, as long as the S&P 500 is now defending this weekly line, which was the breakout line here in November, as long as this line is holding, it's a very strong market. One is best just to play the upside as long as all these things are taking place. So given the weakness in the VIX turning around, all these things are pointing to a market that wants to move higher. What can I say? Let's take a look at some ideas. Let's take a look at Alibaba on a breakout front. If you believe that this market is truly poised to bounce, Alibaba is one you can watch for an entry if it can clear this all-time monthly closing high. And the level to watch here is it needs to hold, we see here, it needs to hold above 111.64. So it was earlier, it was above this level, but this is a level to watch which goes back to this all-time monthly closing high. If it can clear that monthly closing high, the stock is a buy. Why? Because it meets the minimum requirements with the RSIs moving at all-time highs. RSI has a chance of moving above 61.8 for the first time ever, which would be bullish. And of course the MACDs are trading, one of them is trading at all-time highs, which is what we want to see. So it meets the minimum requirement, no question about that. It just needs to be trading above 111.64. The other stock that is also breaking out and is above the buy point is actually WIFI, Wi-Fi. And here the buy point is on the weekly, but let's take a look at the monthly. And take a look at the monthly to see that it meets the minimum requirements. Right now we are looking at the stock moving above the recent high here. In other words, the RSI is moving to 3-year highs, and we can see here that we got a breakout on the MACDs to 3-year highs. So definitely meets the minimum requirements. RSIs and MACDs are doing what they need to do. One would like the RSI here to move above 69.1. It's getting close to that, and so we can use the recent, it already broke out on the monthly here, just between, let's call it about 12:30. We can use the weekly for an entry, and it is within buy point range. This is the entry here, and that would be as long as it holds above the recent weekly closing high, and the level to watch there is 13.28. The stock is above that, so it's breaking out, and this is one that is showing good strength. One would want it to defend that 13.28 level. Now, to save time, I'm just going to, there are other stocks that I've mentioned here. Check the description of the video, but I'm going to show you why you can watch this. All of them are future buy points. For example, AXIM would need to break out above the recent monthly closing high. So they all have future buy points. So you'd need to set an alert. Don't buy them until they move above their buy points. For example, here it needs to move above 14.03 before you can consider this a buy. The minimum requirements are met on all of this. The other one is GNCA. This one would need to break out on the weekly. So let me just go ahead and just share you the buy points. They do meet the minimum requirements. That's why they're on the list. This one would need to break out. So don't buy this until it clears this 2016 weekly closing high. The level to watch here is it needs to confirm that it has strength by breaking out and moving above 6.54. So set an alert. If it breaks out above 6.54, then this is a good candidate. The other one to watch is JD. And again, this one also has a future buy point. The reason why I'm giving you some future buy point ideas is because I would like the market to confirm its strength. So if the market is strong, these things are going to clear their future breakout level. So here the level to watch for JD is it would need to be above 34.10. So set an alert. If it breaks out above 34.10, this is a good candidate to own, and it does meet the minimum requirements on the monthly. The other one also is NEWR, NEWR, and here we can see that it needs to break out above the recent all-time monthly closing high. So wait for it to break out and confirm strength by moving above 39.65, which is the all-time monthly closing high from 2015, before you can consider it a buy. Take a look at another idea. Keep in mind, whichever one of these breaks out before the other, just take the one that breaks out. If one breaks out before the rest of them, then that's the one that is timely. So just go with what breaks out first and see what happens. SKIS has a buy point of 5.93. So wait for it to clear 5.93 before you can go and buy this one. It would need to prove itself, and that would also need the market to be stable and strong at that time. The last one on the list is TDOC, also with a future buy point, and here the buy point is on the weekly. It would need to clear the recent weekly closing high before it can be a buy. It's very close to that level. The level to watch there is any movement above 25.45. It is above about 10 cents from there, but if it can clear 25.45, then that's the stock you can own whenever it breaks out. Otherwise, failure for any one of these stocks to break out means that you have to ignore them. Let's take a look at two other candidates. AMD, as of right now, is looking to break out. No, it's looking to rebound. And you can see that if I just draw a line on the weekly right there, this is where it's been bouncing on the weekly time frame. All this has been good re-entry, and so if this can hold on a weekly chart, that's where the re-entry is. All right, so as long as this line is holding, the assumption is it might have to test the recent highs, maybe with a chance of breaking above that. If you take a look at the daily, and we can go back about 18 months, so we can capture the lows of last year. you can see that this is where it moved above this range and did not look back. So just like we saw with the Nasdaq and the S&P 500 and the Dow, once it moved above this range, it had a nice run from 2 to 15. It's a huge run. Found support here for this re-entry, found support here for this re-entry, now finding support exactly on this line. So if you want to play a rebound, take a look at AMD. As long as this line is holding, it has a chance of over time moving higher, maybe even attacking recent highs, maybe even breaking through them. So right now it has flipped from being a sell, where we were considering a sell here, to a rebound buy. As long as this line is holding, we can keep it on the daily and go to NVIDIA, and you can see NVIDIA here also coming back to test this level here. This level was the entry of the lows of 2000 and off this breakout level. Stock had a nice run, 25, 120, huge run. And recent, it came close here for the lows there, bouncing on this level here, and now back above that line. Also, we can see that on the weekly, it is bouncing back above the RSI 50 level. As long as the RSI 50 level is holding, this means that now potentially the next agenda here is to test recent highs or even break through them. Last time we bounced on the RSI 50 was here with uniform activity for the lows of early 2016. So as long as this is holding, we have to assume that this market continues to favor a rebound. If you draw the line connecting RSI lows, this line is holding right now, and as long as that's the case, one can expect this to logically move higher in the coming weeks and in the coming months, unless it breaks back below this line. So we take one quick look at the market here. As I record, market's been creeping higher, and I'm just going to end this video with that 5-minute chart for the S&P 500, because if the market has cleared that line, then it is telling us that all the problems short term that the market was facing in terms of resistance have been taken care of, and that this market is poised to move higher. And you can see that we talked about this even before this last hour movement, and right now this is being violated to the upside. The market is opening the possibility for higher prices at this rate. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings.